Hello, it's Adil bringing you a review of the FTSE 100 from an intermarket analysis perspective, which obviously is something that I specialize in, and I do a lot of study, and my trading plan and methodology is based upon that. Okay, so the FTSE 100. Okay, so from the outset, my view this week is going to be bullish. I'll try and explain why. Obviously, it will be based upon geopolitics because that's dictating price action at present. A lot of emotion is involved here, a lot of emotive trading candles, as you can see. Very volatile, illogical, irrational price action based on news flow. That's either coming out of Ukraine, Russia, Israel, Palestine, Iraq now, and obviously America is involved. So there's the situation with regards to Turkey as well, with regards to the presidential, Mr. Tayyip Erdogan, the PM, Prime Minister now, obviously, who's hopefully come back in power. Personally, I like him. I think he's quite a firm, erudite chap. Hopefully, will lead Turkey to better things. Okay, so overall, that's the situation. Obviously, geopolitics rule the roost. They dictate sentiment, dictate price action. So obviously, we'll have to react accordingly. Always remember, geopolitics is an exogenous variable event. It's not something that we can control. We can only control the endogenous variables. So, for example, in economic data that comes out as per our economic calendar, and general news flow and sentiment in the markets based on price action. So that's what we rely on: support and resistance. And obviously, if you're a momentum or indicator-based trader, then obviously you rely on that as well. Okay, but personally, I focus on price action. So as you can see, all I have is moving averages, and even those I don't place a great amount of emphasis on. Okay, mainly it's to do with hedge funds utilizing the moving averages and their guides. Not something that I base my sole trading decision on. Okay, I use a multiple array of variables in order to base my decisions. So I utilize John Murphy, who has done extensive research and passed on the baton of intermarket analysis. So I focus on forex, currency market, the commodities, and the equities, stroke indices, and obviously the bond market. So talking about the bond market, there's a very good article that I just retweeted with regards to stocks and the reconvergence with the yields, which is very, very important. So focus on that. Just retweeted that by Ashraf Laidi. Certainly worth a read. Okay. Right, so basically, where are we from a fundamental perspective? Okay, over the weekend we've had talks with regards to Russia and Ukraine, and the Russians want to call a truce or work towards a truce. So obviously that's positive for the markets. Now that alleviates the risk and obviously de-escalates the tension there, which obviously is positive for Europe. Okay, although the threat and the concern of Russian sanctions and obviously retaliatory measure by Russia with regards to banning of fruit and veg and other products, obviously dairy products as well, which obviously will hurt the European economy. Now, with regards to the demand of gas and oil, obviously that's going to be a serious issue and serious concern going forward. There is talk with regards to Russia over the weekend intercepting a US submarine. That may well escalate tensions again. That will have to be something that we have to react to, and again, it's an exogenous variable event which is beyond our control, and that's why we have stop losses there to protect us. Okay, the last few weeks have been very, very crazy to trade. Personally, I've not done very good at all. Last week I just about managed plus 80 after being down minus 150 points. The week before minus 200 points. So it hasn't been a good week or a good month for me at all. The last few weeks, very, very poor performance from my perspective. And because it's very hard to read the market, you have to put your stop losses in place where the markets are moving 50 to 60 points either side, and you have a 30-point stop loss, then obviously that gets eaten, and it's very hard for you to work out which direction this market's going. But that's all part and parcel of trading, and nobody has consistent months good, although I have to say the last month has been my worst. I've never had a losing month in the last, 10 years. I've had losing weeks, but not losing months. So this last month has been pretty poor. Okay, so but again, it's all part, and like I said, it's all part of the game. And the last few weeks, like I said, have not been normal. with regards to the sheer number of geopolitical events and concerns hitting the market at once. Okay, obviously we've got weak economic growth as well in the eurozone, which is a concern. With regards to the US, the concern has been about wage inflation. Okay, wage inflation was weak last week, so that will obviously lead to a weaker dollar. Obviously that then that implies, or there's anticipation then from investors with regards to QE and interest rates obviously being postponed. Obviously the move higher, easy monetary policy, dovish stance from Yellen continues, so obviously that's good for the equity market. With regards to Japan, obviously on Friday we did have Japan talk about, or on the weekend we've had Japan talk about more easing, and with regards to the deflationary threat there. So again, that should certainly catch a bid from that perspective, and watch out for the yen pairs. So USD JPY, Euro JPY should certainly catch a bid. So I'm not only am I bullish on the FTSE, I'm actually bullish on the euro and bullish on the yen pairs as well. Okay, not only so that explains the geopolitical side of things. Now also one more aspect that we need to touch upon is Israel and Palestine. They've just extended the truce over the weekend for another 72 hours. So the Israelis massacring and their genocide in Gaza, thank God, has come to an end. I think they've killed enough women and children. The imbeciles, from my perspective, I think they are genocidal. I think they've truly lost the plot. And it's not the Jewish people. The Jewish people, Orthodox Jewish people, which I speak to all the time, absolutely abhor the Israeli government because they're Zionists. And Zionists is some sort of extreme right-wing party that believes in total annihilation of the Palestinian people, and the massacring and the butchering of them as well. So these are sick individuals, okay, just like football hooligans. Okay, so you have Islamic extremists, you have Jewish extremists. So it's not the extreme that we focus on. We have to focus on the moderates, and the moderates are the majority, and that's what we should always focus and base our opinion on. Okay, just like the majority of Muslims, they're peaceful individuals. We have a few bad apples. Same thing with the Jewish people. You know, the majority of them are very peace-loving, kind-hearted individuals. It's just they have bad apples as well. So that's how you should look at it and focus on it. Okay, so but it is hypocritical when the American and the UK government focus on humanitarian efforts in Iraq, yet totally ignore the Gazan people. Okay, the people of Gaza have no running water, they have no electricity. The only electricity supply they had was actually bombed to smithereens. Their schools that they take shelter in get bombed to smithereens, even after the UN has given them coordinates of the UN facilities 17 times, yet they still intend to bomb them to smithereens. So it's insanity. I mean, your places of worship are not even safe. Historically, in if you look at all the wars previously, houses of worship were one of the safest places to be. So it's insanity. Okay, absolute insanity. It's just a shame that the radicals take control and the extremists come to power. It's a shame. Okay, but either way, the truce obviously is there, so that will obviously help the markets from a geopolitical perspective. So any signs of de-escalation, Russia, Palestine, Iraq. The Iraqi situation is certainly a new one. Okay, that will obviously take time for people to understand, and with regards to the markets to factor that in. Whether or not that's interpreted as bullish and bearish, again, that's open to interpretation now. Although initially the markets have taken it negative, but I certainly think that's been factored in. Again, I'm going to take that day to day. Okay, I'll have to observe my risk FX, which I generally observe are New Zealand dollar and the Aussie dollar, the USD JPY and Euro JPY, and see what the effect on that will be, and then I'll be able to react based on a day trading perspective. Okay, so that's basically what I'll be doing from that perspective. So geopolitics aside, then if we focus on economic data, this week obviously it's all about inflation data in the UK as well, wage inflation, so that's going to be interesting. But with regards to FTSE, it should support the FTSE. Well, overall the FTSE is supported by a weaker sterling. Okay, sterling has been absolutely hammered in the last few sessions, the last week or so now. as rate rise expectations drop. So if once the currency drops, that obviously it implies that the rate rise expectations are dropping, and if that's the case, then obviously that's going to help the UK economy from that perspective. So obviously bear that in mind, and that's obviously going to help the FTSE 100 bounce now that all the bad news has been factored in. So literally you've the worst of the worst situation has been factored in. All the bearish news has been factored in. So what's left now is a short squeeze, and that's exactly what I expect to occur this week. Okay, so geopolitics, economic data again is open to multiple interpretation. From the US perspective, stronger GDP, lower wage inflation equals dovish monetary policy, so it's a Goldilocks situation. The UK, certain information was positive, other information was negative. Overall, it's interpreted as interest rates not rising as quickly as expected. So that's dovish monetary policy. That's good for equities. Okay. With regards to the European Union, Mr. Draghi did state that the ABS is certainly looking to be implemented, although he hasn't stated that he is going to implement it. Hence the reason why the euro's had a pop. Okay. Again, that's open to multiple interpretation. I'm going to try and do a different video on the euro if I get time, and the yen pairs if I get time. As you can see, these videos go on and on, but I'm trying to cover geopolitics now, so that in my next video hopefully I don't need to go over it as much. Okay, so a weaker euro is going to help Europe, although Mr. Draghi has said that the ABS is certainly in the works, so, and he's hired a specialist to implement that as well, although he hasn't actually implemented it. So he's dangling the carrot like he has been doing for a long time now. Okay, but the main aim there was to talk down the euro, and obviously that didn't work because we had a short squeeze higher. So that one could argue that's certainly been factored in as well. But obviously, given the fact that the wage inflation in the US was weaker than expected, obviously that helped the euro to move higher as well. And also given the fact that there was talk about Russians and the Ukrainians coming to a truce, that obviously helped the euro as well. So there's a number of factors there, and I don't want to go into currencies, especially from a fundamental perspective. So overall, de-escalation in terms of geopolitics, a weaker sterling is going to help the FTSE move higher from my perspective, and obviously a stronger China. Okay, China over the weekend, inflation data came out much lower than the target, or their expected target of 3%. Economic data from China, their exports increased, which means that the euro and Europe and the US and the UK, Europe, UK, US, well, basically the world, obviously you must be buying in order for their exports to increase, which obviously is a positive sign, so that obviously helps growth. And stock markets have been selling off when China has been moving higher, so there needs to be a restoration or a rebalancing there, so global equities must catch up with China, so that's certainly a factor there as well. So there's a lot of other variables as well, but they're generally the main ones why I expect from a fundamental perspective we move higher. Okay, so certainly a short squeeze is on the card, is on the menu, so keep an eye out for that. Okay, now let's have a look at it from a technical perspective. Okay, this is what everybody's interested in nowadays. Nobody focuses on fundamentals, everybody's too obsessed with technicals, so let's try and elaborate on them. Okay, so as you can see, key trend line, trend line, trend line, trend line, trend line. When you have an array of trend lines coming into confluence, what does that mean? Expect short covering. Okay, so you've got a diagonal trend line support, horizontal trend line support, downward sloping trend line support, upward sloping trend line support, bottoming tail, horizontal support held. Need I say more? Okay, short squeeze is coming. Okay, right. That's the FTSE 100. Let's have a look at the FTSE 250. Give you an insight there as well. Okay, FTSE 250. Here we go. FTSE 250 bottoming tail, diagonal trend line support, horizontal support. Need I say more? Okay, so we move higher, test the upper bound, lower sterling helping the FTSE 250, helping the mid caps. Okay, so let's go to the FTSE 350. Same concept there, bottoming tail, horizontal support. We're moving higher. Okay, now let's go to our smaller time frame, see if you can give you an insight there. A bit of a technical mess at the moment, so let me try and clean this up for you. Obviously that was a failed inverted head and shoulders, and that's why we had an emotive sell-off in the markets, and that was mainly due to the Iraq situation being declared. Okay, so unfilled gap first of all, there's your magnet straight away, 6670, that's my target this week. I expect that gap to close, and that's basically what I'll be targeting. First gap that must close is going to be this one here. Okay, so this gap here is currently at the 6600 level, so I expect that gap to close. Okay, that's basically what I'll be focusing on. Okay, from my perspective, you're looking at 6600 and 6670. They're the two gaps that. Okay. Right, that's the situation here. Okay, so let's have a look at this. Here we go. Right, gap here, 6670 and 6600. Okay, right, now we are going to focus from that perspective. Okay, so we look for a technical pattern always. We did have a miniature inverted head and shoulders pattern, as you can see here. Left shoulder, head, right shoulder, and then we're looking for a target here, lower target 6530. Your neckline was around 656, just looking at 40 points, and obviously we had that. We got to 6500 almost, sorry, 6600 almost, and obviously I've reversed. So basically look for a slight minor pullback initially. So basically, because we've already reached the 6600 in the futures market, so that gap fill will be achieved because the inverted head and shoulders target's been hit because we retested the neckline and bounced. So looking for 6600 resistance initially. So that's from the outset, and that will mainly be because of the fact that obviously the Iraq war, etc., and the situation in Gaza, Palestine, and Russia, Ukraine may well impact, but mainly the Iraq war. That's the main geopolitical event that's causing a sell-off in the markets at present. So expect that obviously to sell off that market. Obviously, given the fact that we've already at 6600, the market itself has gapped up around 40 points. Okay, so we need the market to go back now down and close this gap. Once this gap closes, then bang, off we go. Off we go to the races. That's basically what I'm expecting. So 6600 will be a resistance level that I'll be looking to short. We come back, fill the gap in, hit this trend line, diagonal trend line support, then off we go to the races to close this gap at 6670. Okay, that's basically what my game plan will be this week. Okay, right, so let's have a look at a 60-minute chart, see if that can give you some elaboration. Let's have a look here. It's a bit of a mess right now, but let's just ignore all this, try and make it clearer for you. Okay, so let's see where we're at. Okay, so basically we can take this, draw our diagonal trend line, as you can see here, and nothing really other than that, to be honest, from that other perspective. I mean, you did have this trend line, but you got violated, so ignore that for now. And basically we've had a failed bear flag, market short squeeze, so at least we expect the 6600. Obviously that'll be your initial resistance, but what do I expect to play out in the major scheme of things? Inverted head and shoulders. This is what I expect. Bang, 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 bang. Okay, that's what I expect to happen. Or alternatively, we go up, we retest this, then obviously then we go bang. So overall, I expect inverted head and shoulders, and ultimate price action target will be around the 6700 in 6720 this week. That's basically what I'm looking for. Okay, whether or not we get that is a different story, but like I said, this gap must be filled first of all. 6670 region, and then we'll see from there. So it's all about geopolitics. Take it day to day. That's basically how I trade, and that's what day traders do. Okay, so it's all about taking it day to day. Okay, folks, so risk on, risk off. This video has been long enough. Okay, I've given my explanation from a TA and an FA perspective.